Mistry, the Vice Chairman and CEO of HDFC Limited. Mr. Mistry, thanks so much for joining us here on ET Now. Uh, would you say this 25 basis point rate hike is along the expected lines, or were you, for one, expecting a pause? This is the first instance that we're seeing a back-to-back rate hike since October of 2013. Was it necessary to hike rates now? Could we have waited because, the last rate hike had managed to suck out some of the liquidity?
No, I don't think a rate hike was unexpected. My sense was, and I mentioned this in an interview a couple of days ago, that there would be a rate hike. Either it would happen now or it will happen in the next credit policy, which is October. But I would think it's more logical for RBI to sort of get it earlier rather than get it later. So if there is any positive impact that is to come of the policy in terms of controlling inflation, that positive impact is front-loaded rather than back-loaded. So I don't think it should surprise anyone. I think it was an expected thing. People could have been a little divided on whether it would happen now or it would happen in October, but I think it's a good thing it's out of the way and it's happened now. I don't believe there will be another rate hike in October. So at least till December we are done with the rate hike cycle. That's my view.
Okay, so yes, you're right. You had spoken about this in the past, but tell me now, going forward, and this is what the stock markets want to know about. This is what the consumers want to know about. Will banks and mortgage institutions pass it on immediately to consumers? All of you, if I may say so, are very quick to pass on the burden, but do take your time in cutting rates.
See, ultimately, I think they'll wait and watch for some time. It may not be very long, but they will wait for a little while. Because at the end of the day, lending rates are a function of cost of funds. So if cost of funds increases as a result of the increase in the lending rate, then I'm sure all the mortgage companies, the banks will necessarily pass on the rate hike to consumers. And at the end of the day, if the objective of the policy is to be achieved, then there is no point in the higher interest rate being retained at the bank level. It has to be ultimately passed on to the consumers. So over a period of time, I'm sure it will get passed on. Difficult to say whether it will happen right away or happen with a little bit of a lag.
You said that you don't expect any rate hikes till December. By how much do you see rate increases through the course of the financial year?
See, it's a tough call to make at this point because it's dependent on so many factors which are today not in our control. We have elections coming up next year, so that will create a little bit of element of uncertainty. That's number one. Number two, we don't know what's going to happen to crude prices. Crude prices have marginally improved in recent times, but they are still significantly higher than what one would like to see them. So given all the US economy is doing extremely well, US is increasing rates. Now if US is increasing rates and if India does not, then you could see a massive flow of money out of India, which could put an even greater pressure on the currency, which is not something which is desirable. So I think given all these factors, it's very difficult to take a call over a 6-month time frame on whether further rate hikes will happen or not. But at least in my view, till December we are done with the rate hiking cycle.
The governor in the post press conference, very clearly said that we are at the beginning of a currency war. Macro stability is something which is needed. How real a threat do you think is the currency wars?
Well, currency wars is really something which we have to be very cognizant about. The US policy, the US trade policy is something which is hurting many countries around the world. And the currency wars is also hurting countries. India has seen its currency weaken quite a bit in the last 1 year, but then so have most emerging markets. If you take from January 2018 to July 2018, the rupee has depreciated quite substantially. And what it does, what the depreciation of the rupee does, apart from helping exports a little bit, is that with the objective of controlling further deterioration in the rupee, the RBI keeps intervening in the forex market. As the RBI keeps intervening in the forex market, they keep selling dollars, and when they sell dollars, they suck liquidity out of the system. They suck the rupees out of the system. So liquidity dries up, and as liquidity dries up, it causes market rates to sort of start increasing at a very sharp pace. So we've seen a sharp increase in lending rates. We've seen a sharp increase in market rates in recent times.
Mr. Mistry, I want to get your views on the growth projection of 7.4%. Would you say that this is realistic? Would you say it is optimistic? Remember, when these growth targets had been set, the global environment was very different. We were just talking about the trade wars. The governor, Urjit Patel, himself has been talking about grave risk for the global growth. But we've not seen that being translated into any change in the growth projections.
See, my sense is the macro environment in India today is not great, in the sense that oil prices have gone up, crude prices growing up is putting pressure on inflation, putting pressure on the currency. US is doing well, the rupee has weakened, so the macro is not looking great. But the micro in India, the corporate performances are actually beginning to look better. So we hear from banks that there have been initial signs of pickup in the investment cycle. So investments are beginning to take place. As I mentioned earlier, to my mind, a 0.25% increase in interest rates is not going to, in any material manner, impact the decision of a company whether to make an investment or not. So I think investments will continue to happen, and therefore, to my mind, that growth rate that RBI is projecting is not something which is not achievable. I think it's very much achievable.
Mr. Mistry, there's so many other questions I want to ask you, whether it's, the recent AGM that we saw talking about Mr. Deepak Parekh, the fundraising activities, but we are running out of time. A producer saying we can't get into all of that for now. We'll get you back.